Today I'll show you how I trade, and I refer to it as like the business as usual approach. Why business as usual? Because it's business as usual every time, the same shit, and yeah, I just keep it simple. And yeah, so we start off. Okay, well, damn, you see the chart. The fuck you gonna do? So first of all, the way I trade is on the left side. I have the 15-minute chart open. On the right side, I usually got like the daily chart. For my analysis, I base it off like the futures charts, as I mainly trade gold, Nasdaq, and S&P. Occasionally, I trade Bitcoin. Um, yeah, so we'll just start off. Yeah, do we follow the trend? So for like NQ and S&P 500, unless there's like some big ass economic crises, we usually tend to go long. And then we ask ourselves, do we have any news coming up for today? So, like for example, February 10th, um, yeah, we didn't have any news for the trading day. And yeah, so then we think about, okay, which targets are reasonable on the daily chart or like on the higher time frame chart, such as the 15 minutes. So we just don't say, okay, yeah, we're just gonna target like 22 400. It would be like in the middle of nowhere. Okay, now we just like looking at the daily, and for example, today, okay, we're like the candle body close here and like the wick. So those were like the two levels we've been looking for today. And then the final question we ask ourselves before considering a trade, okay, does it like even look good on the 15-minute chart? Which for me is like the most important of them all. And like an example from this morning, okay, we had like the NQ, we gapped up, and yeah, and we had been just going around, but like steadily upwards. We had like some very good closes here during early London. So okay, yeah, this looks all right. So we'll consider entry. So to get to the specific examples from today, we just go in with a buy stop with after favorable candle close. So we had like a couple of very decent candle closes, which we consider okay, they were good. The important thing here is okay, well, you would kind of at least look for like 15 minutes. If it's a slow day, maybe even on the 5 minute, but you kind of more looking for like a 15 minute or like a 1 hour close. But again, you shouldn't just ignore like the low time frame. Like if the low time frame is just indicating okay, this shit's gonna dump, well, you know, it might want to take a buy. But again, really that comes down to experience and discretion. I'll get later to that. Yeah, so we just kind of place our buy stop above like a reasonable level. So if it breaks above that, we can assume that's likely gonna go high. So okay, we had like some bullish crosses here. We are above a bullish level. So like the thing is, okay, let's say we had like a super shitty ass close here, and we had a buy stop here, which just likely wicked in and just die. So okay, we had like very nice bullish closes. Okay, if we do it like that, it's assuming we're just gonna continue. So now, okay, shit went well. We got in, price moved into our favor. What do? We scale in. Why we do that is basically if it's already going into your favor, it's more likely just to pan. Like if the market says you're right, like why don't you use that situation, you know? And yeah, so after we get in, we kind of at least try to trail our loss, stop loss, and not to enhance our risk too much. But like again, comes down like what you make of it. Usually, I start off with about 0.5% risk. Again, depends on the setup. And then I have my first skin very early when I see okay it's going well. So I get to like about 0.7% because okay with good closes it's more likely that it's gonna go well. So okay we might just throw in some scale in early. And another important thing of the scaling level is it should be at a reasonable level, not a target level. So in this case, yeah, if it's gonna break this, it's more likely to continue. So also, like as I've said about the entry, let's say it would make sense to have like a buy stop, for example, here because that's I'd say more or less a point where it's likely just to end, or like end its run for the moment. So at least want to have it like at some logical level. Okay, yeah, just broke the side, it's gonna likely get here. So again, it really comes down to experience. And yeah, basically we had like further scale in after we were already in. And again, it's like rinse and repeat. One rule I make for myself is as soon as I'm at break even with my total stop loss, I make sure not to open up risk anymore. So let's say my stop loss is already at break even at some point. I'll not allow for like any additional risk. I'm like not opening it up to like let's say 0.1 or 0.2% anymore. Or like even let's say we go crazy like 1%. Hell no. If the break even is already break even, we're not gonna make it. Or is it we're just gonna let it ride? Yeah, and then again, as I said, don't increase total risk. Like if you scale in, it should be at a point where you can also sensibly, that's important, sensibly trail your stop loss. Yeah, so for example, again, trail your stop reasonable. One thing that had happened to me is okay, I traded my stop loss too aggressively. I got stopped out break even, and as you can see, this shit just went to the moon and went for my target. So eventually, I left with nothing that day. And yeah, so that can happen. And the best thing about that just didn't happen once to me today, it happened twice to me today. So that was a trade I posted in the Discord. I entered here, as you can see, I was in very hot water for like a second, and I thought, man, fuck, just donated a percent to the market. But my first decision was not too wrong, so it went up. I scaled in here, here, and here, trailed my stop about here, and pretty much that's where the market went, and I got stopped out for break even. So you see, it looked very nice. That's C trader, by the way. So you don't see like the individual arrows. You just see like your last. You should see like your entry, and then like just with your scale ins, it just the line moves up. And yeah, as you can see, I got like stopped out for like a small loss, and yeah, so pretty much you can fuck up like twice one day. And then a very important question, which most of your cap furus who just are trying to sell shit never say, okay, what do I do if things don't go well? Because, that happens. That happens quite often. The simple answer is cut the trades. You are not married to it. And yeah, so example, also which I did today, like on Bitcoin. So I went in the morning, it also looked decent on the 50-minute chart. Bitcoin, in my opinion, at the moment is more bullish than bearish, even though it has done like a big correction move. And yeah, so just cut the trade and take the L. Tom Hugard has written a very good book about trading and like trading psychology in general, which is called Best Influence. I can really recommend this book. You can like find it online if you really want to, but like else you can buy it for $20. And pretty much what he said, and I think it really gets to the point, is what is more likely, even though it's not impossible, for a junkie to turn his life around in a year, or for a corporate CEO who already had 3 very good quarters to finish the 4th quarter also successfully. I think this applies to trades very well. If it's already going well, it's likely that it's going to do the last bit well too. If it's going like shit, don't waste time on it and your nerves. And again, with losing trades, you can cut them. If it decides to switch into your direction, you can very likely take an entry again. So now we get to the most important point. How can you make this work for you? You ask yourself, for you? What the fuck do you mean? And what do I mean is, well, at the end of the day, every trading approach which can't be automated is pretty much based upon discretionary trading. So basically means what you see in the charts. And yes, I stole that from Iman Trading. I stole that from him. So shout out to him. I think he says very reasonable things and he keeps it real. I quote unquote would aspire to be like him. You can say it like that. And pretty much it comes down to, yeah, you can't automate it, and the thing is, if somebody has a bot which works, he wouldn't sell it. And another good example today from Discord is some weirdo has slipped me a DM. Well, okay, I don't care. And then he went, oh, I'm doing this crazy ass strategy. And I was like, yeah, tell me more, 3 to 5% a day, that sounds good. And then, like, he sends me a fucking link to some Telegram. And asking, like, how much do you want for this crap? Like, $500. I'm like, jeez, like, do you at least make any money off that? Like, can you show something? No. And you know why? Because these morons are not making any money. You want to know how to make money? Statistically speaking, you buy a leveraged S&P 500 ETF, 3 times leverage, for $500. Unless the world goes to shit, you shouldn't have any problems. You buy it on the 1st of January and you sell it on the 16th of December. And you're all right. And you will very likely make more money than with some stupid trading bot with the same $500. And yeah, and by the end of the day, because it can't be automated, it will not work without you, literally. So what can you do to improve your skills, or like your eye for the market, as I like to call it? One option is backtesting. I do that. I think FX Replay has a very good solution for that, costing about $35 per month. I think it's worth it. Like, if you actively use it, just like a gym membership, it's worth it. If you don't use it, well, again, $35. I know you can view it as a donation to a good cause. So I'm subscribed to them for like a very good while. So like for me, it's pretty much like the trading gym. Another thing you can do, and you absolutely should do before you do any prop firm challenges or trade with money, demo trading. And last but not least, journaling. You should make it a habit. I had a hard time, but we'll be very honest, to kind of build that habit. And even though now I'm occasionally slacking with it, pretty much you just, I just screenshot the entry, I screenshot the exit, or like that, so you're scaling in between, and I just add my thoughts to that. And I keep it very simple, so I can go later through this and see my train of thought. So yeah, just kind of make it a habit. And yeah, so that was it. Yeah, I know. Let me know what you think about it. And yeah, so like, I'll be very honest. I don't know if I even will make this video public or not. So today's the 10th of February of 2025. I know, I'll see. So yeah, leave a like, subscribe would be really cool. I have like 8 subscribers right now, so yeah. And I think I'll just do like a second version of this video at some point too. But yeah, just I think for like my first take and first video of this kind, I hope it's not too bad. I just raw dogged it with like PowerPoint. Yeah. So, see ya. Dime pa' dónde vamos después de la playa, si no sé cómo.